All right, good morning, everyone. We are live. It is Friday, Fractional Friday. So I got my man Joseph Cachapalia back, and we got the one and only Dion Financial Freedom Talk here. So, morning, fellas.
Morning. How you
Howdy.
doing?
Good, good. So, yeah, usually maybe every other week or so, me and Joseph dig into fractional real estate. It's a new asset class I'm kind of looking into, wanting to know more about. Joseph does have his own YouTube channel. So, if you want more daily content on that, please go check that out. His channel is in the chat. But he wanted me to bring someone on that would maybe push back a little bit, or we all kind of know Dion for his takes on real estate investing. So I said, I know the perfect individual. So Dion, welcome. And maybe Joseph, you can start first and give a breakdown of what fractional real estate is.
Yeah, sure. So, in general, fractional real estate is somebody owns a property. They cut it up into pieces. There's a couple different ways that they do that. It might be, typically it's in an LLC, and you're getting some share of that LLC. Whether or not it's a registered security varies by platform. What specific rights you actually get in that property vary, but the base case is you get some percentage of rent. My cat's tail just keeps coming on his screen here. You get a percentage of the rent. If the property sells, or when the property sells, you get a percentage of the appreciation, or any money that you get out from the equity side of the sale. And then again, platform dependent, you may or may not get similar tax benefits to when you're investing in properties in real life.
Great. Excuse me. Sorry. Great, simple breakdown, Joseph. Now, Dion, I know it's kind of last minute, but did you get to dig into fractional real estate, or how much do you know about fractional real estate?
So it's ironic. The last time I did a debate with somebody who was an attorney, it was on one rental at a time, and it was with an attorney. And so I'll keep the LLC out of this debate because there are times it applies, and this is a time you should have one. I like the Socratic method of debate, where each person explains the other person's position to the other person's acceptance, and then you debate. So I will start just so that Joseph can go, okay, Dan, you don't understand, or you're close enough. So I think the goal with Joseph's form of investing, this is my Socratic form of debate where I'm going to present your side. You're not dealing with tenants, toilets, and termites. You've got a low barrier to entry, right? It can be a couple $100, could be even less, maybe. You're diversified because you're spread across multiple properties. It's a lot more passive because there's usually professional management, right? You're not involved in the day to day. It's long-term growth with compound interest, in dividends, building wealth over a long period of time. And it's a lot safer. Like, it's a lot less work, a lot less responsibility, a lot more hands-off. Would that be accurate?
I think that's a fantastic summary. The only thing I would add is you have no debt in your personal name.
Okay. So no debt. All right. So you agree? I understand the benefits, because
Yes,
there's
absolutely.
a lot of benefits to it. Right. So here is my take. It depends on the investor, because the investor has a few things. Now, like the catch-22 is the two things that are extremely negative to me. The first one is the low barrier to entry is a myth. The amount that you invest has a lot of times the biggest impact on your end, as much as compound interest does. Like, if you have the same 20 years and you put in $1,000 or you put in $50,000, those same 20 years are going to look very different. A lot of people always go, if you put in more, but later, it doesn't get you as much. But if you put them in at the same time, so the low barrier to entry, how many times are you going to house hack a fractional real estate investment? First question.
It's an interesting question because there's at least one person I know who's doing it, but in general, it's not something that's set up for, it's not,
Right.
you're not
So
going to
that
do it.
person is probably renting the property that is
He's
owned.
renting the unit, and he's starting now to buy
Right.
shares in it. Yeah.
Still having the same
which is
housing
interesting.
expense, losing the few things: the owner-occupied low down payment, best interest rate because it's owner-occupied,
Absolutely.
reducing or eliminating the housing expense. Okay, so the house hacking thing is taken away. Same thing with REITs, same thing with stocks, same thing with crypto. So that, to me, is the first huge negative. The second one that you were happy about, again, it comes down to the investor, right? This is right for you, would be wrong for me. No debt in your personal name. I wish I had millions more. The debt is what set me free. The debt is what made me a multimillionaire. Because here's what you lose. You have $100,000 to invest. I have $100,000 to invest. You buy $100,000 in fractional real estate. You're extremely well diversified. You're very hands off. You're like super protected. You're more lazy at being an investor than I am as the lazy investor. So good job.
Right.
But I buy a $400,000 duplex with my $100,000 down payment. So next year, if you get 10% appreciation, goes up 10% your property, right? You've gained 10 grand if you sell some of it.
Well,
and you're going to be taxed.
This, I think you're maybe missing. There's no debt in my name, but we use debt. The entities are using debt. So we're still getting that leveraged appreciation.
Correct. But are you levered? You own $100,000 worth of it. You're going to gain the gains on $100,000 worth of it because everybody's money is put in their aggregate together.
So if we bought that same duplex as you, our debt on the duplex would look the same as you. So we're in a levered equity position, just like you are.
Okay.
On some of the
fair
platform.
enough. Good. So I'm understanding. That's great. And feel free to clarify anything I don't understand well enough because it's not my asset class. So if I was talking to somebody about stocks or crypto, they'd do the same thing.
Right. And there is some nuance because there are some platforms that will act the way that you're mentioning, but most of them, there's a DSCR loan that the entity's taken out to buy that property. So we're just putting my investment just represents the equity portion of the investment.
Do you receive cash flow without having to sell any of your shares?
Yes, on most of the platforms, yes.
Okay. Who gets the depreciation?
On my favorite platform, I do. On many of them, it is set up as a REIT, so no one really.
Right. So you lose the levered depreciation.
Yes, on many of the platforms you do.
Okay. So then the biggest negative to me that comes in, and the same reason why I don't put any money in syndications, which this is a version of syndications that doesn't generally have to go to what are called accredited investors. Like that's the biggest difference between syndication versus fractional is you don't have to have $1 million net worth or a salary of $250,000 a year to even be advertised to these kind of deals. Is the lack of control. Like every syndication I saw that came out in 2020, 2021, even those owned by Brandon Turner or the ones that Brandon Turner's involved in, of the last three he talked about on one rental at a time, 2 dropped to 0, one's at 50%, meaning basically all of the investors lost 100% of their money. Lenders taking a haircut. The person who put it together was paid on putting it together. So great for them. So you don't get to go binder strategy your tenants. You don't get to go add a closet to turn a debt into a bedroom. You don't get to say, you might prefer tenant turnover to get rents better, closer to market, or you might prefer the binder strategy. All of that's taken out of your hands. So I agree with the initial statement I said. It's far more passive, a lot less, professional, or a lot less a lot more professional management. And to me, that's a huge negative.
Yeah. So a couple of things. I agree to a certain extent, right? For someone like you and me who have real estate experience in real life, like I've been investing. I know you don't probably know anything about me. I've been investing for 20 years prior to getting involved in fractional real estate. And so for a lot of us, I can see that being a negative, right? If I think I'm going to do a better job than whoever's actually picking these properties and whoever's actually running them, yeah, I can concede that there's going to be times where I think I would do a better job than what they're doing as far as decision making. There is currently one platform right now where we do get to, I can propose whatever we want for the property, and as long as I can convince the requisite number of co-owners in that, we can go to town with changing strategies. We've changed short-term rentals to long-term rentals. We can do rehabs. We could, there's the ability to control, although it is somewhat like herding cats. But yeah, I would agree. I mean, I think it is the largest negative for somebody who is experienced, knowledgeable, and has the time to do what we do.
So for me, it makes more sense to invest in fractional real estate, crypto stocks or anything, if you have a longer timeline than if you invest in real estate, because the control, the value add, the compounding sources of income being the cash flow, the I guess there's another negative that comes to mind too. Mark, how many properties do you own?
Oh, it is 17.
17. How many partners do you have?
None. Oh, well, for the one, I didn't count one. I have partners in
The
one.
one with your family, right? From
Yeah, I don't
before.
really count.
Yep.
Yeah, I don't
So, I
really
mean, the
count.
ones that you've bought as rentals. Okay.
Yeah, yes, it's 17.
And Joseph, of the real estate that you own that isn't fractional, do you have any partners?
No, I have private lenders on some, but I don't have any partners.
I mean, I'm partnered with banks, basically, if you'd call a mortgage a partner. I'm partnered
Mhm.
with insurance companies, or I've got those. But I mean, I don't have another human being that says, I don't like the color of the garage. We're going to paint the house. We're going to spend, $5,000 on paint and resealing because I feel like it. That lack of control isn't just that you can't have input. It's that you have to put up with other humans. Have you met people? That's a
Right,
huge negative.
right.
So, I mean, again, to go to your side of the argument, I think it's a great form of diversification for somebody who's extremely wealthy, or a great path for somebody who picks it and just masters that one asset class. Because finding the deals and comparing the deals of different asset classes can be very confusing. A deal that makes sense to put $10,000 into with fractional investing is going to look very different than a deal I want to put $10,000 as part of the down payment of something I'm going to own and control.
I was a little worried when I knew Mark was inviting you that we were going to agree on too much. Because I've watched some of your content, and I think that we have some very similar ideas, and I think that that's accurate, right? Like, for one thing that I think maybe another option is for people who, and this is why I really got into it. So my day job is I have a small agent team here in San Antonio. We only work with investors, and so over the last 6 or 7 years of doing this, I've probably talked to thousands of people who want to be a real estate investor, who talk about real estate investing all the time, and who are just never going to buy their first property. And this is a way that they can immediately become a real estate investor and start to see so I think that's one of the best use cases, is someone who's getting involved, starts to learn, and then can actually see how some of these more professional people are picking properties and doing things, and potentially take some of their returns and later, do what you're doing.
Ironically, that's pretty much what I would say, is if somebody took a strategy like mine much later, right, once they've reached financial freedom, made work optional, and Michael Zuber from One Rental at the time took 1% of his net worth, put it into Bitcoin.
Right.
When Tesla went on sale, I took about 1% of my net worth, and dollar cost averaged $1,000 a day until I hit 1% of my net worth in Tesla because of the protests. And I figured they were temporary. And now it's up like 90%. So that's terrible in less than a year. But I'm not a stock investor. I reached financial freedom by mastering my one asset class. Once I'm not even there yet. I think once your net worth is over 5 million, maybe even 10, then it's time to diversify to protect your wealth. But anything that you do before then, if I took at any point in time $1,000, that's it, just $1,000 away from me saving for the down payment, or me saving for the reserves, or me saving for the cost to make rent ready, I would not have at least one of my properties. It would be costing me hundreds of thousands of dollars a year right now. And that thousand, let's say it tripled. Let's say it went up 10 times. I make 10 grand off that $1,000. The impact to me not having the down payment, the closing costs, or the reserves, or the make ready costs, the day that I needed it to be making offers on that property, would have so significantly negatively impacted my investing that the diversification too early in your strategy is a game stopper. It would have added a decade to me working. But once you've got the wealth, once work is maybe not retirement, you don't have that like 4 or 5x your cash flow needs, but once all your needs are met, and you're not so close on people thinking, okay, I got to have reserves for the bank. Maybe I can use my retirement account as a reserves because I don't actually have the cash. When you're in that growth phase, I think chasing 5 rabbits will make you starve. And fractional crypto, high yield savings accounts, whatever it is, wherever you're putting your money, if it's not towards the strategy that you've chosen where you're all in on, you're going to cost yourself a lot.
All right, Joseph, hold that thought real quick. I just want to say good morning to everyone real fast. And I want to, tuning in from Dion's channel, just in case they're still here, is, I may say it wrong, but Omid, you're asking about the school community. I did put a link there. So just use that link. Let me know when you've joined and we can figure out how to reimburse you the first month of school. Hyder doesn't want to correct you though. He says, Dion, he says, where was it? He said, Bitcoin, correction, Dion. Bitcoin is digital real estate on a digital ledger.
So Joseph, if I came on here and I just said, oh, fractional sucks, I would never do it. Do you care?
Not at all.
No, because it doesn't impact you, right? Here's where Ryan has a heart attack and actually palpitations happen and his blood pressure goes up because I saw how much he has invested in Bitcoin. It's very impressive and he's doing amazing. Real estate has value because people want to put businesses in places. People want to live places. There is only so many places you can build. The permit process is very long. Adding new real estate is a challenge. Sometimes you're making a 2-year plan to put new houses on a street. Crypto has value because people think it has value. It's like a fiat currency. So if I say anything negative crypto or even neutral crypto, it's a physical attack on Ryan's net worth. So the defense has to come out. I haven't even looked, there probably aren't very many comments going, oh, Dion, you're wrong. Fractional is amazing. You have to do it. Because if I don't, then they might lose money. If someone on YouTube says, oh, Bitcoin's a scam, even in quotes, that community goes crazy because you could cost them $100,000 just by having an opinion.
So, I'm not sure if you know this, a lot of the fractional platforms are actually built on blockchain technology. And so my channel happens to have a ton of crypto people who have moved into real estate through fractional real estate. So I 100% understand what you're saying. It is certainly a personal attack on them whenever you talk bad about whatever their preferred crypto is. So I've definitely seen that quite a bit. And I'm not, I own some now, not a ton. And I learned more about blockchain from investing in fractional real estate than I ever would have known otherwise. But yeah, it's a very interesting point because it's something that is only going to have value if other people want it versus being a necessity that people need. And then that's where the value comes from. So
I think there's a lot of synergy there. I think when more and more real estate is transacted with some type of crypto, whether it's Bitcoin or another, there will be more crypto people on channels like mine. But right now, since buying a Bitcoin is basically fractional investing, like not everybody goes out and drops 116 or whatever it is, $1,000 to buy a coin. They go and they put $50 on their Venmo and they transfer it over, and the dollar cost average $50 a week or whatever to buy some more crypto. And that's really close to how you can invest. You can just set it up. Hey, I'm gonna put this towards that fractional investing. So you do have a lower barrier to entry than like the down payments. Yeah, I can see it.
And one of the things too, when we talk about the low barrier to entry, I wanted to add this. It is, from a dollar perspective, it's a lower barrier to entry, but also from a getting off my couch perspective. Now, I have bought real estate in whole assets without ever, without having to go see them as well. But it's a lot more nerve wracking, right? To go buy another home in another market. I know Mark's done this also, where, maybe you haven't ever seen that home. Maybe you're just trusting other professionals. It's a lot easier for me to do that if I'm buying a little piece of one, and if I'm buying with a team that I've bought pieces from before that I know what they're doing, than it is, so it's not just a dollar perspective that it's a low barrier to entry. It's from I don't want to really say effort, because I spend a lot of time doing due diligence on the individual properties, but it's 100% couch money. It's not, going and looking at properties.
Can you explain your portfolio like chronologically, just in real estate before you got into fractional?
Sure. I bought my first duplex. And one thing, I'm a lot different from a lot of the people on here. I really don't like to disclose everything that I own. So I'm going to talk really just
Fair enough.
generalities. But I bought my first duplex in 2005. It was a house hack. It was while I was going to graduate school for real estate. I had a roommate, and it was, interest rates were 6.5% at the time. And with my roommate, I basically covered utilities and I lived for free. I bought my next property probably a year and a half later, which was just a single family home. Uh, in between, I got married, so house hacking sort of fell off the table. Although we have several times bought properties, lived there for a year or two, moved out, and turned it into a rental. So she's okay with us moving, just not really into the house hacking idea. Bought my next big thing, there was like 10-unit property that I bought with some partners. That was after, duplex, single family home, 10 units. And then, I've had a number of different things that I've done since then. I have a chronic disease. And so I spent 3 years not working at all. This is why when I stopped being an attorney, liquidated a decent amount of my portfolio at that time. But really realized I got very worried about my wife trying to deal with our portfolio if I passed away. Now, I was misdiagnosed, and I'm not worried about that anymore, but it is, I'm limited physically. So what I started doing is selling properties and then holding notes. So now virtually everything I own is a private mortgage versus actual equity in properties. And I started doing that 4 or 5 years ago. And where I would just buy properties all cash, sell them with financing. This was a really nice, also pretty similarly passive thing. And it's something where I feel like I can hand this over to my wife and be like, okay, collect payments. If you don't get a payment, then you at least don't have any associated expenses, right? And so you're never going to lose your private mortgage. That you might have to, it might take her longer to collect on it than it should, or to go through the foreclosure process, but it's not as if she's got properties with debt on them that she'd have to deal with tenants or anything like that. So that was sort of my transition. And then about a little over a year ago, I found out about fractional real estate, and I was like, oh, well, I really miss the tax benefits of owning properties versus, the debt that I own. It's all income, right? You get, and I still run my agent business, so I'd prefer to have the equity position to get the write-offs. And so fractional real estate for me made a ton of sense. And it is, it's something, again, it is completely I spend a lot of time picking deals, but from that point forward, it's passive on most of the platforms. And so if she had to take that over, there's no problem whatsoever.
Well, I appreciate you making my point perfectly. So Grant Cardone says, if it doesn't have, it was 16 now, it's like, if it doesn't have 32 units, don't even talk to me.
Mm-hmm.
How did Grant Cardone get started?
Single family home.
Single family house. Meet Kevin. Invest with House Hack, his company. Send all the money to him. Let him be the thing. How did he get started? A 203k loan, right? Like, once you have wealth and you have levers to pull, going into notes, brilliant move, right? And people are often concerned about the tax benefits of real estate, and this is what they want. And I totally get why you kind of went back to it. I did a video with Mark probably 2 years ago now on how I really look forward to paying taxes. I can't wait. That means I made such a metric F ton of money. The government got their share finally. So if you're starting out and you make a little cash flow from your first duplex and it ends up being tax free, or living for free, versus you get money from notes or from fractional, if it's on the platform where you don't get the depreciation, you're going to pay taxes. That sucks in the beginning. Once you had that platform of your portfolio of several rentals and kind of financial freedom, financial stability, even with health concerns and changing jobs and all of that, and concern of your spouse taking it over, you had levers to pull. And when you are pulling levers later in life, sure, all kinds of opportunities open that I wouldn't start with. I wouldn't start with the BRRRR method. I was financially free, completely retired, and I was like, yeah, I'll go try a BRRRR. Wow, I hate this. I'm never doing it again. If I'd started with that, I wouldn't own a rental today. If it was my first deal, I wouldn't. Even if it made me $300,000 in, like it did in about a year and a half, I wouldn't have done it again. But having done it in retirement, I'm like, yeah, that sucked, but who cares? I still don't have to go to work.
So I think that's, I understand your point as far as like, okay, you wouldn't have, you know, for you, if you had started with fractional, you wouldn't have the portfolio that you have today. I think there's of everybody who wants to and thinks about and watches channels like this and wants to become a real estate investor, only a very small fraction of those people are going to take the right actions and become you. I think the vast majority of the rest of those people could improve their life by starting with fractional real estate, and then maybe improve their chances of going from that 90% to the 10% who's actually doing it. Yeah, I think there are, and actually most of the people that I talk to, if I think they can house hack, I'm going to help them with that. If they're in my market and if they're somewhere else, I'm a huge fan of house hacking. If they have a ton of capital, they have a down payment and they're in whatever market they're in, it works. I'm all for that as well. But I think that there's just this huge group of people who are just kind of wannabe investors who are interested in the space. And if it's going to be 5 years before they save up their first down payment, they're going to get derailed somewhere between today and that time period. And that's where I see it being, I see that as the strongest use case for newer investors.
Operation Let You Talk is working great. Thanks for making my point again. Let me ask you a question. Have you ever been in a teaching role, or you've been an attorney? You've probably done presentations or something.
Yes. Yeah.
Okay. The hardest thing when it comes to teaching is remembering what it's like to not know something. That's what most people, they fail as a teacher. They don't understand why somebody can't teach a kid how to tie their shoes when they're so young that it's a real challenge. Not like when they should be at the age they should. I mean, when they're super young and teach them how to tie your shoes. I'll watch parents fail. I've seen parents fail at teaching kids how to tie their shoes, just getting frustrated, not understanding what it's like to not know something. You said not everybody's going to make the right choices, right?
Yeah.
Tell me 3 things that are right choices about buying real estate. If you're going to buy a deal, what are 3 things you look for?
When I say not make, I mean actually like buy the first deal.
Correct.
Right? Like taking that action. Like, right.
So my point is, you've bought several properties, you owned a duplex, you had rentals, you shifted into fractional.
Right.
So you can look at a fractional purchase and you can understand their cash flow. You can understand the market that it's in. You can look at the professionalism of the property manager and think, okay, if they communicate with me through email like this, how's it going to go with tenants? I'm out of here. I'm not going to be in this deal. Know what right choices are. That person that starts putting $50 or $100 a month into fractional investing in bad deals is going to go, wow, real estate sucks. They're not going to have that springboard of knowledge that you had, having owned rentals, being able to look at a deal. Kind of like when I first looked at syndications around 2020, when they started becoming a real big thing. I had enough experience to look at them and go, they're projecting rents are going to continue to go up 10% a year like they did last year. That's stupid. Like, why would somebody put their money in this deal? And then they went up a bunch and then they haven't gone up since for 3 years. And now the interest rates tripled. So a lot of them are falling on their face. I could recognize that. That new investor is not going to do that. You have the knowledge. You can look at a deal and it's like subconscious. You almost have synesthesia with the numbers on the thing. You can see them in different colors. Those are red, even though they're not. And you go, yep, that's going to lose money. That new investor is not going to have that. And I think owning a rental property, learning what it's like to screen tenants, find a lease, how long an eviction takes, all of those things, while they do suck, and it does make the first 5 years suck, is the base that people need. And there's a bunch of information on YouTube University. The people who go, I'm going to spend $12,000 for a weekend retreat at some guru's house, would be better off taking the $12,000 and throwing it at a bad deal and losing it. They would learn more owning one rental.
Completely agree with that.
I did want to just coming from you, Dion's channel, Pinhead says, I wonder what the returns on fractional would be over 10 years. Is it comparable? What is the premium on your time, effort, and experience when investing? But a Pinhead, I also want to let you know, Joseph does have a YouTube channel. He has more daily content on fractional real estate. So go check that out. I put that link in Dion's stream. So go subscribe there. But do you have any maybe quick way to reference that, Joseph? Pinhead's question?
So I can't tell you what they'll be over 10 years. I'll tell you what I've gotten in, on. There's really 3 platforms that I've spent a lot of time on, and then there's 3 others that I've dabbled with, and then a whole bunch that I've decided not to. So on Mogul, that's my absolute favorite platform, I'm averaging 10% cash on cash return. Now this is, I have 15 properties with them. Only 11 have actually closed. So I have investments in 4 that we haven't actually closed yet. So I don't know. But for the 11 that I have, I'm averaging just under 10% cash on cash return. I can't tell you at all, whether that's going to continue or not, and what appreciation is going to look like. They're all in markets I'm really excited about. Like they're my favorite because the team who's picking those deals does a fantastic job. On Lofty, which you've heard me be really critical of, it is a mess, but because it's a mess, there's a lot of distressed deals. I'm in and out of those. I treat those more like a flip than a long-term hold for the most part. My average return on the ones I've exited so far is about 27%. And that's all of those less than a year hold. But that, I don't think anybody's going to jump in and do that. I think the average investor on Lofty loses money. So like Dion, when you were saying, if you go in, you start investing and you have a bad experience and you're going to say real estate's terrible. I do think there's that risk if you're on the wrong, I think if you were on Mogul, I don't buy every deal on there. I buy probably at this point, maybe 50% of what they put out. I'll buy something in. So I think they do. I think you could buy a piece of every single deal that they did and be okay. I don't think I actually think you'd be better than most people perform on their own deals in early years. Because they're just too well-trained people that put this together. But Lofty, I think if you go there with no knowledge at all and you just jump right in and start buying stuff, I mean, I know a lot of people that have lost money doing that. And so it's definitely, it's a good point. And it's part of why I'm doing my channel is because all I'm doing is due diligence videos on, okay, this new property that came out, this is what I think about it. And so there's certainly a risk there. I think it can be mitigated with, education and just like you can with when you're going out and picking deals in real life. The difference is the stakes are just much lower, right? It can, or at least they can be. You can, as much as I talk about fractional real estate across the 6 platforms I'm on, I only have around $100,000 invested. It's not some huge portion of my investments, but because it's I'm a year in. I'm trying to learn and experiment, but it is one of the things that really I think it is the future. I think there will be a lot more going forward, and a lot of people who would never have actually bought their first property will become real estate investors, at least to a certain extent. But I don't know. One of the things that's strange to me is there's so few people in our space actually talking about it. If you search fractional real estate investing and you scroll through YouTube, I'm like half the videos. And I think that part of it is because a lot of people in this industry have a vested interest in it not really working. Because, for example, every single real estate out there doesn't want to see somebody go buy a piece of a deal on a website versus buying a deal from them.
Well, I would counter that with, as an investor, I hope it takes off. Right. So if the barrier right now to buying one of my duplexes is somebody that wants to buy it as an investment needs to save up $150,000 for a 20% down payment, that's a big challenge. But if a bunch of people can put their money together and put down a $500,000 down payment at 20%, the values go up. So I can see lowering the barrier to entry always increases price.
Right.
You go lower interest rate, what happens? Higher price. You go owner occupied, low down payment, or first time home buyer program. What happens? Price goes up. So it's always in the, not always, but it's most often in the investor's best interest to increase the door size that people can fit through to buy these things. So I could see wanting it to go more mainstream. Kind of like one of the reasons, and I'm going to just attack Ryan because he's there. Bitcoin has so much value is you don't have to buy one coin at a time.
Mm-hmm.
You don't have to be the only owner of that coin. You just buy a fraction of it. And so the value goes up because more people can buy fractions. But Lead Pray Hodl is talking about REITs, which don't get the levered appreciation, levered depreciation, all of the benefits that some of the platforms will give, Joseph.
The other thing, Mark, were you going to say something?
No, go ahead. You can answer the question first.
Just the other thing about REITs is, so I started my career in real estate working for two different public REITs, one in the acquisitions department, the other in asset management. And if you're investing in a REIT, you're getting a piece of every deal that they buy. You're not getting to pick and choose. And I will tell you, as someone who worked on the acquisition side on a REIT, sometimes we just have pressure to buy something, right? Like they have capital and you've got to buy it. And I was involved in a deal that as a brand new person, I was like, why are we buying this? This is the worst deal. Like it would seem terrible. And they said, that's going to look really good on our annual report. They bought it for a picture. And it was a deal that nobody thought was really going to make money. And they played, and so I really dislike REITs for my personal experience working for them, just seeing like how much the people making the decision to buy those properties have very little vested interest in those properties doing well over time.
Make sure that everyone knows you guys didn't say that. I said that. So when Aximus lost his respect for me, who effing cares? Bitcoin, not crypto, but Bitcoin is the highest performing asset of the last decade. I say that often. So you can have the lack of respect for me that you want. Get up and go to work. It's time for you to go to work. I don't have to, which was going to be my follow-up question for Joseph. If you started investing in 2005 and you've owned rentals that long, and now you're trying different things, you've looked at REITs, you've looked at, this fractional and everything. Why the day job? Why not riding off into the sunset and all of that?
So my day job is at the most I work, like if I put in 15 hours in a week, that's a ton of hours. Like I am able to, I haven't gone and looked at a property in real life in maybe 2.5 years for my day job. I have a team. I set up a team. So it's for owning a business, it's very much as close to I answer the phone when one of my team members has a problem. I come up with new ideas as the markets shift. But it is like, I get paid way too much for the actual effort that I put in.
No, I love it. That's the perfect answer. Like you don't quit something like that. If it's that easy, if you still enjoy it.
In which I really enjoy, because we only work with investors. I never get or have far fewer of those like emotional, like breakdown type transactions where people are, there's some investing or emotions in investing, but it's much different. But I've gotten to help so many people start the real estate investing journey, which is like, that's the part that I enjoy the most at this point.
That's why I'm on here. That's the best part, meeting with people who are just starting. And thanks, Aximus, for making my point. I say something neutral on Bitcoin, you feel physically attacked because your asset class has no value if people don't want it. If I came on here and I promoted it, I made you money. Like, I get it. That's how your asset class works.
Dion, I do have a question for you though. So like your members only, you guys evaluate deals roughly weekly, right? Would you
Twice
ever twice a month? Okay. Would you ever consider using like a fractional real estate platform to evaluate deals and run numbers?
Only if Joseph was there with us to do it. Because that'd be like saying, hey, Dion, can you evaluate this stock? I'm not a stock guy. Yes, Aximus, I talk bad about stocks too. And none of them are wrong. Right? I say this often, there is no one right way. There's a one right way for you. For me, it was making work optional with real estate and not even wanting to own the real estate. Like, I don't want a bigger portfolio. I don't want the portfolio the size I want. I might even downsize eventually. I wanted time freedom so I can travel and scuba dive and not worry about what people think. Because if Aximus's opinion of me got really low, when this is over, I'm going to check my bank account and see if that made an impact. Because that's how I look at the world now. I hope that Aximus is investing like Ryan is in Bitcoin because it is performing really well. And I would hope that they make a crap ton of money. Like, I don't care what asset class you pick. I'm the person that says increase active income, decrease expenses, work on credit score, talk to lenders, whether it's to, your lending platform is you're putting your money into this deal that's going to fractionally and use leverage and everything, minus to buy mine. Educate yourself on your asset class and then actually take action. I don't care what the asset class is.
Yeah, I think that's why I also like to bring on Joseph and Coach Massey, Nick, like different asset classes, because not everyone wants to do, traditional real estate transactions. So I'm always trying to bring on people that are investing in different places. But Chris Webb does have a question for you, I believe, Joseph. He says, how many people investing in fractional real estate can explain the collaborated debt obligation, CDO, and how this is different?
I think he means a collateralized debt obligation when he's saying CDO. I don't know if not, I'm not sure what he's talking about. But the CDOs, if that's what he's asking about, the collateralized debt obligations, if it's collaborated, I'm not sure. But I think most of the people that are investing in fractional real estate would have no idea about that. I only do because I have a master's degree in land economics and real estate, and we actually took a class on them. And then working on the finance side and commercial real estate, we dealt with a little bit. I don't think it really has anything to do with investing in fractional real estate. It is, it's basically how mortgages were repackaged to be sold. And so I guess in that sense, right, you had investors buying buying the repackaged groups of mortgages. And so that created, a lot of people blame CDOs and for the 2008 financial crisis, right? You started having more and more stuff get chopped up and pooled and creating risk that people didn't see. This is actually why I like fractional real estate, because it's the opposite of that. I'm always looking at one asset and I'm buying a piece of that asset. I get to do my full due diligence. I get to look at what's going on there versus a lot of other ways that you can invest in real estate fractionally or with smaller amounts of money, like REITs, like funds. Those you have risks more similar to what you'd have with the CDOs, where you have a bunch of stuff getting dumped into one basket, and all you get to do is invest in that basket. I'm not sure if that's where he's going with it or not, but that's what I would think.
I would say Chris had a great question. If people are investing in the asset class, how many people can explain it? Do you know how many investors I deal with on a day-to-day basis that own rental properties that have no clue the difference between FHA, conventional, DSCR? They go to their lender and they say, hey, I want to buy this. The lender says, this is a loan package that's the best for you because it probably has the best commission for the broker. And they go with it. Like, I have friends that my brother retired with 10 rentals, has never had a mortgage, has no idea how it would work. He wouldn't own a rental if it came with a mortgage. You need to master the asset class that's going to give you the outcome that you want, not know the information that the average investor doesn't need to. But Chris had a great point of who can explain it. It's the same with real estate. I think the more you educate yourself, the better your likelihood of success. But I think I've asked my brother a couple times on camera just to kind of put him on the spot to explain a really simple real estate thing, and he has no clue. But he owns rentals and he never has to work again. Like, that's the goal. It's not to know everything. And I see that Aximus is still going because he feels attacked because he knows his asset class is so weak.
Yeah, we'll get to that.
I wanted I to a certain extent, I believe that education will improve your chances of success. I think a lot of people get too stuck on learning the next thing versus taking action and buying the first thing. So I think there's a lot of risk, especially in our industry, where there's a lot of people who benefit from you just being on that learning flywheel versus actually doing flywheel. You know, I mean, there's just, with all the course providers and coaching programs, like I know somebody, and this, I'm not going to, I know somebody who's been part of the Rich Dad coaching for ever, spent a ton of money and has still never bought a deal, you know? So there's, I think you have to give yourself a certain, like, okay, because I'm really, you know, I think overeducated for what I do. I think that it makes sense to give yourself a cutoff. Like, okay, this is the date I'm going to start taking action and buying stuff. You know, of course, I want to keep learning, but I feel like it's way too often people use learning one more thing as an excuse not to get started.
That Bigger Pockets calls that analysis paralysis. At least that's where
Right.
I've heard it 100 times.
Right.
And there's a point where you need to educate yourself. I take it from the Marine Corps, right? No plan gets to 100%. You get to 80% and then take action, because you have to be ready for all the stuff that isn't going to go the way you expected it to. And I think when you master an asset class, you don't know everything about it. You know enough to have mitigated the risk, to have a confidence in your expected return, and then actually do something with it.
I did want to say good morning to Charles McCune and show him that I'm wearing the hat he sent me. He sent me a gift because I'm always promoting Bucky's merchandise, but he did want to send me, I guess, Wally's. It's a different version or in his area. But Josh Burdick says he signed up with Mogul. So Josh has been following our Fractional Friday. So he said he signed up with Mogul so I could see their deals. They seem nice. The owner told me that typical investor puts in at least 5,000. I haven't invested with them, but their properties seem to fully fund within a fairly short time.
I mean, like I said, they are my favorite platform. Of course, you want to do your own due diligence on them. They could be a scam and I'm missing it, right? Like, I always want to make sure that's clear, because I do sometimes worry I'm too much of a fanboy. I've only been investing with them since December of last year. But yes, I mean, I think if you compare them to any other platform, they're actually looking for good deals. Where, like, some of the platforms are, we're trying to put every piece of real estate we can find on here and let you guys figure it out yourself. So I think that's the big difference with what they're doing. And just for your knowledge, they were two guys that worked at Goldman Sachs in Goldman Sachs real estate investing, buying similar types of properties, you know, residential investment properties. So.
Chris has another question for you, Joseph. It says, I cannot see the difference between this and other equity fund. I am a bit behind in the video because I paused, but Joe said everyone will own some type of real estate to a certain extent.
Yeah. So, I mean, the big difference between a fund is when you buy a fund, you're getting a piece of every deal that fund decides to buy. When you buy fractional real estate, you get to pick one property. And so I'm on Mogul. I'm in the Mogul club. I see every deal they put out, but I'm only buying about, you know, a piece of one out of every other property that they put out. They put out a lot that I think they're probably going to do fine, but they don't fit my particular risk preference well. They don't fit my view of where the world is going with certain things, you know, because they do. They've got short-term rentals and pad splits are their two primary products, and I think I really like the pad split model, but I don't like it when you have 10 bedrooms. I get worried that that's going to get regulated away. When they do their 6-bedroom pad split, that's still killing it from a return side. I'm all about those, you know. So you get to pick and choose, where if I invest in a fund, I'm just stuck in that fund.
Hyder says he's telling Aximus he's still working on Dion. You know, he's still respectable. Aximus does say he may understand IRL real estate, but clearly doesn't understand or have taken the time to understand blockchain. That's okay.
Aximus has a great point right there, and we've made it several times in this video. When you're going to invest, when you're going to put your money at risk, master your asset class. That is not my asset class. I say it clearly all the time. Stocks are not my asset class. If I was going to do something like Joseph did, where I shift strategies midstream or somewhere, there would be a good 6 months to a year, maybe, of deep research, and not with just AI, because it gets almost everything wrong, but deep research on my own, connecting with people who invest in that asset class, getting into those meetups, getting around the people who use that language. learning the different ways to invest, learning the different timelines to expect, how to diversify inside the asset class. Like I'm in real estate. I'd like to hear Aximus tell me how I've diversified 2 different ways, specifically that almost anybody who watches my content would know exactly how I've diversified. How do you diversify in Bitcoin? I guarantee there's a way. I guarantee there's a smart way to do it. I guarantee there's a bunch of wrong ways to do it, just like with real estate. There's 1,000 ways you can do it wrong. If you've mastered your asset class, I'm with Joseph. You did it for 2005 to 2024, 19 years. And then you start, well, maybe before you started looking at REITs and some other things, but you were well into your asset class before you started looking at other ways to invest.
Yeah, absolutely. And I think, and that's something I completely agree with, right? That you definitely need to just, that it terrifies me, the number of people that will join one of these sites and then just YOLO into a bunch of properties. There are, on one of the platforms, there are entities that you can buy a piece of that no longer own a piece of real estate in those entities. The deeds were transferred out, allegedly fraudulently, and there are still people jumping in, looking at a couple of things and buying those. So that terrifies me, right? Like I think that's why I say, like, it is a lower barrier to entry, but I'm all day long telling people you should do due diligence on every single one that you buy. And yeah, that takes some education to understand, what does that due diligence look like.
Coach Nick Massey, lead pray huddle. Go check out his YouTube channel, but he has a great point. He says, I love real estate, Bitcoin, and a difference of opinion. People only grow by being challenged and not taking it personally. That's why I love to bring Dion on. He definitely makes you think. No,
I mean, hopefully people watching understand that. I say this off camera usually. When you're having a debate, you have to take the con side. Like let's say I really liked fractional investing. What good would it do to have 2 people on here talking about the pros without having somebody go, here's another way of thinking about it. Same thing with Bitcoin and crypto. And I know every time I just say the word, haters jump in and go, oh, that sounded neutral. I hate your guts.
So I've asked a few people in the chat. So far, it looks like a couple no's for not more interested in fractional real estate. A couple people said they are interested, but they like having more control. But yeah, I definitely think it's a space to, like you said, look into further. I think it's a good place for people maybe to start. They can run numbers, because they can see numbers that people are putting out there to make it, hey, you should buy this based on the numbers they're presenting, and you can kind of use your own numbers and say, hey, this is a good deal, a bad deal, or whatnot. Anything else you guys want to dig into this before I kind of bring up maybe a final question for Dion on one of his more recent Three Amigo videos, or anything else on fractional real estate?
I just want to touch on what you just said. I think, I think it is one way too, if you are thinking about entering new markets in real estate, like, you like to invest in remotely, on some of the platforms where you get to be like a lot more active, deal with the property managers directly, some of them even, some interaction with the tenants. I think that would be a great way to learn new markets before you jump into them. Because I know that's another way that a lot of people have gotten in trouble, just jumping into a market that, without, it's just, you can use it as a due diligence tool and a relatively cheap one, but also making a little bit of money along the way.
Any final words on fractional real estate, Dion?
No, just the one last one to piss off Aximus. AI is connected with quantum computing, is stripping blockchain of its security. Like, it's instantly hacked. So feel secure in that for now, but give it another year. Let's see how that goes. Oh, it'll never happen. And AI will never code for you either, except it's doing it better than 99% of the coders now.
But Hyder does say, to Dion's credit, he separated Bitcoin and crypto when talking about them. So that's one of Hyder's things. Okay, maybe one last question on this. So Bill, all fired up, is asking, is there any risk of tenant coming back at you if you're a part owner, Joseph?
I think there's always risk. I mean, the entities are owned in an LLC, or the properties are owned in an LLC. There's typically a third-party management company involved that's professional. and and they're if they're doing it well on the platform, they also are very overinsured from the perspective of the way I look at insurance. And so, there's a lot of protection from it. I would never say that it's impossible that it would happen, especially on some of the platforms like a Lofty, where you have a little bit more active role in the management. I could imagine it happening, but in general, there's a lot of protections in place to keep that from happening.
All right. I know most people tuning in from my channel probably subscribe to Joseph's already. So on Dion's channel, I have put Joseph's YouTube channel. So go please subscribe. He does more daily content on fractional real estate. So if you want to know more about that. But if we want to wrap things up, I do, Dion and the three amigos have done their most recent video was about being a nice man or a good man. And I think a lot of people, I don't know if confused is the right word. But some people have messaged me kind of like trying to break down that video. So maybe in short, could you kind of break it down or explain it a little bit better, maybe, Dion?
I think Zuber was being a little introspective and trying to figure out the way he looks at life based on something he saw from a motivational speaker, Matthew McConaughey. And I'm not sure exactly where he was going with it. I think I don't want to put words in his mouth, but there are a lot of nice people who won't help you at all, who won't do anything for you, who will be so passive, such a wet noodle, that they're not a positive impact on anybody that they interact with. Their goal is to not be a negative impact. But a good person will tell you the hard things, will do the hard things. And I think he's trying to make sure that he is a good man and not just a nice person. And I said it in the video, nice people tend to have more friends, but they're super shallow. They're not real friendships. The good man has pushed away all of the people that have thin skin, but the people that are left is a tight circle of actual friends who are there for each other. I'm not sure where Zuber was going with it. I have a very different view towards life than nice or good. I think I don't know how to say it without just completely pissing off the wrong people. I don't have respect for anybody who is not capable of extreme violence. If I see a guy wearing sandals, I've instantly, all respect's gone for him, no matter what his monetary level is in life. I know you live in Hawaii, so it's a different thing there. You're on the beach. That's
I
not
was
what I'm
just
talking
gonna
about. I'm like
say.
in everywhere else except for the beach, maybe. But the person who's not thinking of having massive amounts of aggression that is controlled, that to me makes you a good person. If you're not that, you're just a weak person. And I have no use for weak people. And so I didn't say that in that video. That was Zuber's video. He was talking about his thing. I have a different outlook on life, but that's me.
Interesting perspective. Joseph, I don't know if I'm not sure if you saw that video. Any thoughts on nice man and versus good man?
Yeah, I didn't actually see that. But I think that like just in general, that distinction, I'm probably a lot of people think I'm not very nice. Like when I especially uh one of my agents, for the first year she worked with me, she always just accused me of trying to kill her hopes and dreams. She is now my best performing agent and makes way more than she ever did, before coming to my team. I think that, yeah, a lot of times the truth doesn't feel nice, but it's the right thing to do. And so I think that that's my guess on where maybe some of that distinction is coming from, right? Because it's and sometimes it is like, if I disagree with someone and I think they're really wrong about something, and I think their viewpoint on it might actually be hurting them, it's I can be nice and let not start an argument with them, or I can actually try to help them and tell them the truth about it, which might hurt their feelings. So I can see that, and I think that I skew towards not necessarily the nice side, but actually wanting to help people regardless of if there's some feelings hurt.
Yeah, a few of the comments. J6 saying being the enforcer kind of man. Let's see. Yes, I was going to ask that about the Crocs, though, when you said I was going to take a little personal. But Charles McCune says people pleasing shortcomings. Hyder does say, I wear sandals and I am ready for whatever comes my way. Real men wear sandals in a masculine way.
Yeah, I did. You know, I do wear Crocs every day, but when I fought in a cage, it was barefoot. So I feel like I do okay with the Crocs. So
Josh Burdick does say that video was great. Zuber, like a lot of silent majority, have been far too nice for too long. Time for feelings hurting honesty. Yep. All right. Well, this was a good one. I found out. I thought Dion was the perfect one to bring on to this. Oh wait, we'll make a channel Aximus and maybe you're okay. Well, So here, Aximus, if you're, I'm not sure. So Dion's asking you to make a channel. We can all tune in there and see what your content is all about. But yeah.
If I have only created one hater in this video, I feel like I have epically failed.
All right. Well, this is a good Fractional Friday. Thank you, Dion, for taking time out of your busy schedule. I know you got a lot of things coming up, like BPCon. When are you heading out for that?
Tomorrow morning.
Tomorrow morning. All right.
Be in Vegas. Aximus, I will be in Vegas presenting at Caesar's Palace. Hope to see you there.
And LobbyCon takes effect when? When are you guys?
We're probably Saturday evening, all day Sunday, all day. Well, not all day Monday. I'm presenting almost all day Monday, and then Tuesday before 3 p.m. So LobbyCon will be happening almost every day.
All right. And is your live stream going to be the same time on Tuesday? Or
it'll probably be late because I'm on stage keynote presenter at Bigger Pockets. I think at like 3:30 on Tuesday. I won't be done by 4 when I normally go live.
All right, everyone. Thanks for tuning in. Joseph, thanks for doing this. And everyone, have a great start to your weekend.
thanks a lot.